Okay, Shegun. I just want to do this. I don't know because if you're asking and you're saying that you're a newbie, I don't know because you need to have some foundation, which I don't know whether you have or not. Okay, that's why I'm asking you, how much can you afford? Do you understand? That's why I'm asking you that, really. But okay, I will just address your question, because sometimes if you have this foundation or foundations, some questions that you are asking will not arise. That's why I'm I think I'm not going to do this again. This is just haphazard. Though before then I'll know you better. I'll interview you and I'll know you better, then I know where I can help and where you can also help. We are all learning. No one is perfect. Now, how can we know that the market is going to give a deep pullback or a shallow pullback? If you look at this market very well, from this point to this point, this is actually this point is actually a shallow pullback. That is, market pullback and continued to this point. Okay, this is the move, this is the move, this is shallow pullback, this is where the market even went to. Okay, so this is what we can refer to as what? A shallow pullback. Alright, now how do you know if this market is going to give you a shallow pullback? That is why I said liquidity inducement. This slide is just to picture a way of identifying what is a shallow pullback or not. For example, as we have this impulse, correction, impulse. Okay, for me, so far, as much as I know, if I want to define whether a move is actually shallow or deep pullback, it has to be with reference to this range. Okay, the pullback is supposed to be above the equilibrium price. Okay, when the pullback is above the equilibrium price, I can refer to this as a deep pullback. Okay, but when the pullback did not get to the equilibrium price before the new impulse, I can refer to this as what? Shallow pullback. Alright, so that is how, if you look at this, if you consider this as a range, it's going to be about the equilibrium price. And you can see where price actually continued the impulse from, which is clearly a very, very shallow pullback. In this slide, we are just trying to validate the reason why we might suspect that the market might have a shallow pullback. Okay, you see this block that is here is this block. Okay, this is just enlargement. We are on the 15 minutes time frame. We are also on the 15 minutes time frame. It's just an enlargement for you to see. Okay, and I answered you How do you know? How can you predict? I said liquidity inducement. When there is liquidity inducement close to the point of interest, this is the POI, okay? When there is liquidity inducement close to the point of interest, then you might suspect that this point of interest, even though it is shallow, it is not located here deeply, it is located on this shallow region, might be significant for price to either reverse or react. But I must tell you something quickly. When I trade shallow pullbacks, I always have the feeling that price eventually is going to do a deep pullback. So when you are trading a shallow pullback, you should be able to take your profit on time. Okay, now this is what we call liquidity inducement. These approximately equal highs that are here, they are all liquidity. And when it is close to a point of interest like this, okay, we refer to it as liquidity inducement. In this case, this is inducing selling, inducing people to sell. And you can see what price did when it grabbed the liquidity existing above this zone, okay, tapping into the point of interest and coming down. Because we have liquidity inducement close to this point of interest, it is giving this point of interest a validity. Now, how did I mark this point of interest? This is what we call hidden base. Okay, very simple. Hidden base is just, for example, you have a candle like this, then you have another candle that is another bearish candle in this case. You take the low of this week and mark the high of this week, you have a point of interest. This is what we call hidden base. Okay, exactly what I did. The low of this week and the high of this week, you have a point of interest. So you can see how price actually tapped into these points of interest. Okay, why is it hidden base? It is hidden base because on the 15 minutes time frame, there's actually a bullish candle that is existing here, but you don't see it on the 15 minutes time frame. It is when you scale down to maybe a 5 minutes time frame, then you cannot see what the bullish candle I'm talking about. Can you see the bullish candle now? This is a bullish candle. It's a point of interest. It's a point of interest. Okay, it's a point of interest because after this you have an imbalance here, you have liquidity inducement here. Then you get to the point of interest, so it's a point of interest. So you can see that the point of interest is even driving from all these points. Sorry, I'm not showing it here. These are approximately equal highs, all of them. They are all point of interest. Okay, they are all liquidity inducement for price to tap into the zone. All right, exactly what price did. Price tapped into that zone. Okay, so that's what we're saying. As simple as that. Okay, the answer is, when do you suspect a shallow pullback? When you have a point of interest in the shallow region and there is liquidity inducement close to the point of interest, you may suspect that there might be at least a reaction on a higher time frame. That reaction can be something great on the lower time frame. Okay, so now we're going to be focusing on this portion just to know how to enter. Okay, in our next slide we'll focus on that. So this is what we have. In this schematic, price was approaching its point of interest. Just trying to explain what took place here. Created a higher high, higher low, higher high, and then we have what? A liquidity grab, because after creating this high, price traded below this high. Okay, price traded below this high, and as a confirmation, we have a short-term low. Price went further to break the short-term low. When you have liquidity grab this way, either a manipulation, and price is now going further to break this short-term low, you suspect that the market might easily go down. See what happened here. Higher high, higher low, higher high, cleared the liquidity existing here. This is the liquidity line, came down, could not create another higher high, you know, this is lower high, and price eventually did what? Break this short-term low that is here. Once you break the short-term low, it's confirming to you that we might likely go down, and you do what? You can easily enter, you know, place your and you can see that even this move has what? Imbalance. Okay, it has imbalance. Okay, so that's all I can really explain. I didn't even want to spend this time. Thank you.